Okay, what's up, y'all? Okay, one of the indicators that I want to share with you guys is called the average directional movement. And basically, what that is the ADX, all right? Now, the ADX is a trend following indicator, all right? It's not an oscillator, all right? There are many oscillators, and if you guys could recall, I once said that oscillators are used to track sideways markets, meaning when price is moving sideways or there's consolidation, you know what I mean? There's no direct trend, meaning it's not going up or down, it's kind of staying still. That's called consolidation, you know what I mean? Some people call it basis, but this particular indicator is a trend following indicator. So it's designed to determine how strong the trend is. All right. And it's real essential if you know how to work it. You know what I mean? Real essential. All right. But I'm going to show you guys, how to get to it. So, okay. Your green line is going to represent the actual ADX. All right. Meaning, whenever you see this green line rise, approaching the 80 point, approaching the 80 level, that means that the trend is strong. You know what I mean? Whatever trend or whatever, depending on which way it's going. Because because if the red line is on top of the blue line, then that means that the bears are in control. All right? And vice versa. If the blue line is on top of the red line, then the bulls are in control. And if you guys can remember, I explained in earlier videos the difference between a bear and a bull, all right? And it's just simply buying or selling. That's it. It's just different terminology, but that's basically what it means. Bears and bulls. So throughout this process, I'm going to be referencing bears and bulls, and I want you guys to understand that when I make that reference, it's in correlation with which way I feel the market is going to go. You know what I mean? Like if I say, okay, the bears are in control, it means that the down days are trending. You know what I mean? Or going down. You know what I'm saying? For example, let me show you what I'm talking about. Okay. The bears are in control. You see when this red line increases, see when it falls, the red line gains momentum because remember, price is supposed to be a direct reflection of these indicators. So it's a direct reflection of what's actually happening in price when you see the indicator coinciding with what happens in price. All right. See, the red line is going up. It's increasing as price falls. It's to show that the bears have strength. You with me? Boom. If you notice right here, boom, the blue line start going up. It start going up. If you would have gave it enough time, the blue line would have crossed over the red line. But since it fell right back down, the red line stayed on top of the blue line. So that lets me know that the downtrend was still going to continue. All right. This was an attempted downtrend. It caught support. It went back up. Then it fell again. So this would have let me know that there was still strength with the bears. Why? Because the blue line never crossed the red line. All right. when the blue line crosses and get way above the red line, then you know that there's strength with the bulls. All right. For example, look what happened right here. Boom. The blue line crossed the red line. Look, as it went up, the red line got on top. Look at your ADX, which is to show you this this particular line shows you the bears. This particular line shows you the bulls. This particular line shows you the strength. So when you see the ADX line, this is called the ADX line. Now, typically, there could be you could shade it and color it any color. I just decided to make it green, but the ADX line can be any color, as well as the bulls and bears. You can change and tweak the colors to these charts as you choose to. So I'm just simply using this color scheme, but you don't have to. All right. So once this crosses, what happens? Boom. The bulls even crossed the ADX and took off. And as the bulls accelerated, the bears declined. You see how the bears fell down? Because now it's rising. Remember, when it's rising, see, when this fell, this is going to rise, all right? Which is your ADX. Now, remember that we talked about the RSI and how basically you use 70% and 30%. Well, not necessarily a percentage, but you're using that number. You're using 70 and 30 to measure oversold and overbought conditions. Remember that? It's the same way with this particular indicator, except we're using the numbers 80 and 20 because those are the numbers that's typically used. You know what I mean? But we're just using those numbers. You know, I've seen ADXs where they go up to 100. You know what I'm saying? But for the sake of what I'm showing you guys and just the simplicity of how to read this indicator, we gonna go with 80-20. All right. So meaning once the bulls go above 80, there's a resistance, meaning it's time to sell. Likewise, you know what I'm saying? Like once the bears go above excuse me, 80, it's the same thing. It's time to sell. You know what I mean? It hit the ceiling. You with me? It don't even necessarily have to go above that. You know what I mean? Now, on this particular board where I drew the ADX, it's not an accurate drawing because technically, if price was right here, your ADX would be more higher. Like, for example, right here, your ADX would typically be more higher, maybe in the 80 range. You know what I'm saying? So, but for the sake of this video and showing you guys what's going on, you know what I'm saying? That's going to have to do, you know? But again, let's go over it one more time. All right? But before we do, I want to reiterate how important it is for you to understand the difference between a trend following indicator and the oscillator, all right? Because this is a trend following indicator. So this is very essential, as well as the EMA, which is the exponential moving average. I discussed that and I talked to you guys about that previously. But now we're talking about the ADX and how important it is to understand the importance of knowing the difference between a trend following indicator and an oscillator. There's many oscillators, like you have the stochastic, the MACD, the momentum indicator. I can go on and on. You know what I'm saying? But all these are oscillators. All these are indicators that will be ineffective while the market is trending. And this is why I'm telling you guys that whenever the market is going in one particular direction for a long period of time, these oscillator indicators are ineffective and they will not work. Now, the indicator that will work is the trend following indicators, which is the ADX, which I just told you guys about and what I'm showing you guys how to read now. Now, I will add this disclaimer like I did previously and say that I don't recommend this indicator or any other indicators for new traders. So if you are new to this information and if this sounds foreign to you, then I don't recommend you trade with any indicator at all. I recommend you start off by trading support and resistance, learning support and resistance, and trade off price action. Make your entries off of price action. All right. So, but if you want to watch the video and be enlightened early, that's fine too. You know what I'm saying? I just don't recommend you actually trading that way until you secure the skill properly. You know what I mean? Or at least understand the basics and how this works. All right. So let's take it from the top. When this happened, which is a mini downtrend, right? Minor downtrend. When that happened, the bears rose. You with me? They rose from 20 to, let's say, 50. All right? Which was a good form of backup. All right? Remember, I told you guys, indicators are to serve as backup. You know what I mean? Think about it as you going in the building. This price, so this is you. This is actually what this market is trading at, where price is. So this is you. Think of this as being a friend of yours, coming to back you up, coming to confirm what you already know. You already know that you need to go to war with these institutional investors, so you need backup. You know what I'm saying? You don't need backup, but backup will increase the probability of you succeeding because you got more than one set of eyes. You with me? All right, so it increased. Boom. Okay, right here. It started decreasing. Why? Because it started going the opposite way. All right, and these are the bears. Bears are associated with down trades. You know what I'm saying? Bears are associated with being short or selling. You know what I mean? So what we had, boom, it went down. As it went up again, it went down. It decreased. So this is typically what you're going to see. You know what I'm saying? Typically, all right? On the bull side, what happened? It went up, boom. It went down, boom. It went down, boom. It went down. Boom, it went down some more. It's supposed to go up a little bit. You know what I'm saying? But it went down. Because of my drawing, excuse me for that. But this should be a little higher. You know what I'm saying? But at the same time, it's kind of all right because it was confirmation that the downtrend was going to continue. So this is the initial beginning of the downtrend. See, minor trend. This is the initial beginning, right? Okay, so here you have a support and a failed resistance. All right, so this failed to reach that point. All right, so you knew more than likely it was going to come down a little bit, at least to the support area. And what it did, it came just maybe 4 feet below this area. You know what I'm saying? So this goes to show you that this is a very sensitive area, your floor. This is your floor, all right? It came down, boom. And what it did, when it came down, it gave you an indication. So your indicator gave you a backup confirmation to what you're seeing right here. Because once it reached this point and once this candle grew, let's say nothing existed right here but this candle, right? Picture that in your mind, that none of this exists, nothing but this blue candle, right? And you saw this line increasing, which is the bulls, and you know it was already below this support, and you know more than likely it wasn't going below that. You know what I'm saying? Now, remember I said that you don't really read it the same when the market is consolidating. You know what I'm saying? Now, for the sake of showing you guys how the ADX work, I'm really factoring in minor trends, but trends are, you got major trends and minor trends. So this is what I would call a minor trend. You know what I'm saying? So, but I said all that to say that all the time you won't be able to read a chart the way this is with this many candles as a reliable trend when looking at the ADX, because on this particular board, at least, you know what I mean? I'm speaking specifically on this board, you know what I'm saying? Because a lot of you guys who never heard of this strategy, you know, you gonna, want to know what's going on, but don't fear. There's nothing to fear because this information is available to you, and I don't mind at all, you know what I mean? But so make a long story short, you had a second form of confirmation right here when this happened. All right. And the bulls start rising and increasing. All right. Boom. And they came down. Then the ADX start falling, then rising. And the reason, now the ADX generally is going to increase depending on the strength of the trend, right? But let's say, for example, if the trend is bullish, right? And then your ADX line is going to decrease. But if that bullish trend declines and you're going to see that blue line decline some, your ADX is going to decline as well until the bears rise. So when the bears rise, the ADX is just going to go right back to where it was. So the ADX is always going to move slower than the other two. You understand? Because the trend is strong, and until there's a official reversal, that ADX is pretty much going to stand still. You know what I'm saying? Or move very little, So, but I just want you guys to keep that in mind. You know what I'm saying? And again, a lot of this stuff I went over with you guys on videos, but it's also located in the book that I showed you guys. So go back on, some of these prior videos or whatever, and check that out. You know what I'm saying? That's the book. You know what I mean? Fellas Trade Best. That's the book. You know what I mean? It touches on the ADX. It gives you specifics. It touches on everything you really could think of. You know what I'm saying? Because for the fact, as far as phase one, what I planned for you guys, we just about wrapped it up. We already covered. We covered how to identify an open and close, right? On a candlestick. We covered how to read a trend. We covered an indicator, which is the indicator, all right? We covered the RSI. We covered support and resistance, which is very crucial. Now we're covering the ADX, all right? Now, we have very little left to cover as far as technical analysis, as far as the technical analysis standpoint. You know what I mean? But we have a few more things. We got the divergence that we're going to discuss, and maybe a few other things. You know what I'm saying? But I really want to move you guys to the next phase. You know what I'm saying? And the next phase is understanding risk management. All right, it's really understanding the trapper system. And those of you who have got the book already, you understand what the trapper system is. So this is my plan. My plan to do eventually is to give you guys the trapper system. All right, it's technical analysis, it's risk management, it's all orders, it's psychology, it's patience. You know what I mean? It's evaluation. All right, those are different sectors of what I'm going to share with you guys. But this information was the hardest to learn. So I wanted to start with technical analysis, all right? Now, it ain't hard at all, but I want to start here because it's the hardest to learn if we want to be, and it takes the longest to learn. Now, the rest of the stuff is a breeze. You know what I mean? But you need to know it, and you need to apply it daily as well as the technical analysis. So every other thing that I show you is just as important as technical analysis, all right? Some would argue that some of these other factors are even more important, such as risk management. You know what I mean? But I'm showing you guys, and I'm going to give you guys it all. You know what I mean? Just stick with me and, you know, support any way you can. Support can mean you simply applying this in your everyday life. You know what I'm saying? Support don't necessarily have to be financial. You know what I'm saying? Support is you showing me how much you appreciate it. And you can show me how much you appreciate it by applying it. You know what I'm saying? Because there's nothing out there that can even copy or duplicate the information I'm showing you. You know what I'm saying? This is a top tier skill. You know what I mean? And if you haven't figured that out already, then maybe this is not for you. You know what I'm saying? But if you stayed to the end of this video, I'm willing to bet you that you figured it out. You know what I'm saying? So show me you appreciate me by putting in the work and doing what you need to do to get this information, because this is nothing like you ever seen in your life. You know what I'm saying? I can promise you that. You know, this is the biggest industry in the world by far. $2.5 trillion per day. That's how much money circulates in this industry. All right. I got different stuff that I'm going to show you guys. All right. You got something that exists out there called proprietary prop firms. And I'm not going to touch too much on that on this video, but in upcoming videos I will be talking about that, and I'm showing you guys how to start trading with these prop firms. All right, they're gonna let you trade with 100 bands, 200,000, 300,000, 400,000, up to $1 million. You got several of these companies. I'm talking about several. I'm talking about several plus a several, and we're gonna get to that. And that's how big this industry is. That's how powerful you are once you're able to digest this information. All right. So I hope you guys enjoyed the video, and I hope you guys really learned about what I showed you. And I told you guys basically that there's a difference between trend follower indicators and oscillators. And trend follower indicators are basically those that follow trends, like the ADX, the one I just shared with you guys. All right. So that's to sum it up. I know I touched on different things, but that's to sum it up. All right. Until next time, peace.